The last 4 years, Obama was in power. Gold has outperformed the S&P. What can we expect these next 4 years? Joining me to talk about this today is Ian McAvity. He's the editor of Deliberations, a speaker here at the show, and he just has people following him. I see him, so people really want to get your opinion. Ian, thank you so much for being with me.
My pleasure to be here, Daniela. I've been at every one of these shows for 25 years.
Right,
so a lot of them are old friends.
So you definitely know your stuff, Ian. What can we expect for gold going forward, especially when we're looking at compared to stocks?
Basically, the gold price has been outperforming the stock market or the S&P or the Dow since 2001. And when I show a ratio of the gold relative to the Dow, the point that I make to people is we're only halfway there. We went from 44 to 1 to 7 to 1, but 3 times in history it's been 1 to 1. Okay. And a ratio of 7 to 1 to 1 to 1 means that over the next several years, the gold price is going to go be substantially stronger relatively than the Dow.
Okay.
We're only halfway there. We're not attracting the lunacy that we saw back in the late 1970s. I've been involved in gold since the late 1960s.
Okay.
And we haven't seen anything yet.
So when you speak of these levels, what do you think are some price targets gold could hit?
Well, look, I don't deal in price targets per se, but looking at the breakouts that we've had in this cycle, I made the point in my talk this afternoon that when we break through the $1,800 level, based on the average of just the last 4 cycles, that would say that we'll probably see $2,600 before next September.
Wow. Okay.
And it could occur as early as February or March if all kinds of things hit the fan. And that's just looking at what happens in terms of percentage price movement and how many weeks it takes to go. And the problem that people have is they're impatient. They think everything should always go up. Yeah. When gold goes, it goes like the devil. But then it also goes sideways for a long time to grind everybody's expectations away. And I think we're very close to breaking through the 1,800 level.
So what do you think would get it past the 1,800 level? Are you looking at tensions in the Middle East? Are you looking at a weaker U.S. dollar? What are some factors?
I would say the Middle East is one factor. The European promises, they put out the friendly press releases and never deliver on the action. And I see Washington is now doing the same thing with the fiscal cliff. I made the comment today that when they say that they're not going to leave it until December 31st, I think they've just guaranteed that they're going to ruin our New Year's Eve this year. And the other thing as well is there's a new leadership in China.
Right.
That is probably going to be somewhat impatient if Obama starts to take an arrogant tone towards China and starts trying to get a little more active in Asia. I think the new leadership in China may stand up to him.
Okay.
And in essence, I don't know which mistake it's going to be that's going to precipitate it, but increasingly gold is the only place for an investor to hide.
So this is an interesting point of view because I just came off of an interview with an analyst who was looking at the 1650 range for gold next year. Obviously, you don't agree with that. You're a technical analyst. So short term, let me ask you before year end, where do you think we could hit and the first 6 months of 2013?
I've recently said we could still hit 2,000 before the end of the year. Now, at the same time, when you talk about 1650, the 1525 to 1650 area has been tested repeatedly over the course of the last year. We've now got a ceiling because we probed 1800 three times. What I'm looking at is a series of higher lows that says to me that this is a pattern that's more likely to resolve up than down.
Okay.
Now, I've been speaking at these shows for years. I'm a big contrarian. I made the comment in my speech today that I've been speaking in San Francisco for 20 years at this show. I have never seen so many empty chairs in the room, which made me even more bullish than I was before I started speaking. Now, the enthusiasm for gold, people are very skeptical right now. It's when I have a large crowd following me. Today, I haven't had much of it's been a very small group of old friends.
Right.
But I remember at the top in 2005, Bob Bishop needed guards to get to the washroom.
I think Rick Rule was talking about that in his talk. So, Ian, let me ask you, we spoke about your highs, but if you look at the lows, what low side could gold go to?
I would say the risk of 1650 couldn't be ruled out in a crash environment, but I'm not convinced we're going to be under.
That's still a high.
No, it's not high, but if we're going to go to 6,000 or 8,000 in the next several years, who really cares? I asked people. I said, if you bought something at $3 and it traded up to 19 and fell back to 15, are you going to worry about it?
Right.
But if you add 2 zeros to it, they all get antsy.
So, Ian, you're bullish on gold. Do you feel the same for silver?
I'm very bullish on silver, but it's going to need the leadership of gold. I think you get basically to get the gold price running through 1800 to 2000, then you're going to have the whole sector come back alive again.
Okay. Ian, finally, just to recap, key price targets for gold. You mentioned 1800. What are some other key points we should be looking at?
Well, 1800 to me is the most critical breakout level that's above us at this stage.
Okay.
I see a number of indicators that suggest that's going to be resolved sooner rather than later. I watched the political framework, and there are all kinds of mistakes that haven't yet been made,
Right.
and I'm sure that they will be making mistakes.
Ian, thank you so much for your thoughts today.
My pleasure.
And thanks for watching our continuous coverage from the San Francisco Hard Asset Show. You can email me any comments or questions at newsfeedback or at kitco.com, or better yet, tweet me at Daniela Cambone. Thanks for watching.